Because this has introduced a new component in this entire thing, which if we do not understand, we would think, okay, it is only with regard to reporting of figures, it is only with regard to accounting and related entries, that's what we have to really worry with. No. That is where it goes on to see, it says, of course, we'll first understand the responsibility. It says that such internal financial controls are adequate and are operating effectively. Now, the question may come in, okay, what is there to do with fraud here? Now, we go back to that traditional question when we started studying our study material as article clerks. Auditor is a watchdog, not a bloodhound. Now, where do we stand today? If you really look at the provisions that are going to come in here, you feel that are we all going to become bloodhounds? Actually, there is a very thin line of differentiation. If you see, does the statutory auditor have any role, not now, traditionally, with regard to fraud? Is there a role? How many of you say yes, there was a role? How many say no, there was no role? There is a serious arithmetic problem in this session. Yes, when was that introduced? Good point. When was that introduced? It was not there earlier if you see the act. Right? No, but generally, see what happens, let us understand. With due respects to everybody who does a good job. Now, one of your article clerks or assistants would take the previous year audit report file, save it as current year file. You have to tell him, have you changed the year? Right? And then the rest of the things is you rely upon asking certain few questions with your immediate in charge of that audit, maybe an audit assistant or an audit manager, saying that, Elna paatitya. Now the whole problem is, yes, the person would have obviously gone through everything as per your checklist, maybe programs, you also ask certain questions, but when it comes to fraud, what should you ask? Should you ask your audit clerk, did you make sure you have found all frauds? Is it possible? It is not possible. Is it your responsibility? Is it your responsibility as statutory auditor to find all frauds? No, it is not there. Then what is your role? Anyway, I am not supposed to find all frauds. Let us say you are going to sign the balance sheet. The CFO says, sir, if those controls were proper, no, these kind of damages would not have happened. But otherwise everything is okay. Then you ask obviously a question, what damages? No, these frauds that happened in our... Should you sign or not sign? An information has been given to you by the CFO of the company saying that there were frauds in this company, which he says, don't quote me. Usually comes with that disclaimer, don't quote me. But believe me, sir, it is serious problem. So now what's your confidence in signing that? What should you do about it? This is where it is very important to understand the concept of red flags. Is this a red flag? It is a red flag. You might have to stop your exercise there of signing that and demand certain additional procedures to be performed. Rather, it should have been part of your audit planning process. The auditor has to be in the know of the general schemes of fraud, has to be in the know of what it involves and which areas these frauds would generally proliferate into, and do adequate amount of checks. When I say adequate amount of checks, to find out any red flags, you have to keep your antenna up for red flags. If you find a red flag, for example, you suddenly find when you are analyzing purchases, there is an abnormal trend. Should you investigate it as a statutory auditor? You may do certain additional checks to see if you are able to find certain further indicators. That is where what we call as the extending of the sampling guideline. You take a sample, the first sample gives you a feeling that things are not okay. What do you need to do? You extend the sample to satisfy yourself that is it just one spike or is it something to do much more than that? While your job ends there, but if you do have a specific concern, you have to put it in writing as part of a management representative demanding an investigation, full-fledged investigation into the matter. It may still be in that what we call as, maybe suspected stage of fraud. But you clearly see there is a variation in the internal control compliance. So this is where the role starts coming in, internal financial controls, and this is what makes it murkier. If you really see the explanation which is given under section 144.5, it defines internal financial controls as follows. Please look at it from the perspective of the audits that you perform and see what is covered in this. This is with regard to, of course, listed companies, but then it says internal financial control means this clearly sets all the controls also for anti-fraud or fraud risk management. Right? It says the policies, procedures adopted by the company for ensuring, this is the most dangerous word, orderly and efficient conduct of business. As a statutory auditor who is looking at the figures of the balance sheet, profit and loss account and whatever, right? You would generally be only concerned with internal controls over financial reporting, which means whether the figures have come properly from those books of account. Would you bother about operational items? Here we are talking about operational controls because it is saying orderly and efficient conduct of business. Why should the statutory auditor be worried about? So this is something which you need to clearly understand. And it goes on to say, including adherence to company's policies. It doesn't say what kind of policies. Obviously, most of the policies of the companies are around operations. It says adherence to company's policies, safeguarding its assets, and specifically includes the prevention, detection of frauds and errors. And of course, it goes on to say what we traditionally thought was internal controls over financial reporting, which is accuracy and completeness of accounting records, timely preparation of reliable financial information. Earlier, the general thinking that we had was, well, as a statutory auditor, internal controls over financial reporting means the last two clauses, that's it. Rest of the things I am not bothered about unless and until the internal auditor has pointed out something or the management brings it to my understanding and I see that there is a financial impact of those. So it further goes on to say, wherein it says in the clause C that there is an express statement to be made in the director's responsibility statement. It says the directors had taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this act. If you go back and connect internal financial control and start connecting here adequacy of records, believe me, there is a huge responsibility sitting there. This also highlights the opportunity in audit of listed companies. Believe me, the financial auditor alone cannot do this job. There is required a team of specialist chartered accountants who can focus on and help such listed companies in setting up the systems and processes which conform to these requirements. It's a huge area of practice because now it's mandated, you can't escape it, right? It also says, of course, they have devised, see the word, devised proper systems to ensure compliance with the provisions of all applicable laws and that such systems were adequate and operating effectively. Underline the word all applicable laws. Does the company have a list of all applicable laws? It is mandated part of listed companies to do this job. They do prepare. Information Technology Act. Will it come under this? It will come under this, isn't it? Of course, Foreign Exchange Regulation Act, the Foreign Exchange Management Act will obviously form. So if you really look at, I am reminded of the government when they took over, they looked at scrapping about 500 acts. There are, I believe, 6,000 plus acts. Now, every act, you have to do a risk assessment and say applicable, not applicable to this company. That is only at the act level. Then go down to the clauses and understand which clauses are applicable. A lifetime of audit is there. Anyway, of course, there is what we call as the materiality aspect, which brings down the cost effectiveness to this. With regard to fraud, as I said, there are specific requirements now coming for listed companies. Just establish a vigil mechanism for directors and employees to report concerns about unethical behavior, actual or suspected fraud, or violation of the company's code of conduct and ethics policy. Ethics policy is drafted by a consultant. It is endorsed and approved by the board, and it lies in the library of the chairman. It doesn't percolate down, and that's where the whole problem starts. The ethics can't be driven like that. It has to be demonstrative. Well, you will see that the first understanding of culture is, does the policy procedure rules apply to the board of directors? You will find that 80% of the cases it does not apply. We are above law. Straight away you are creating an environment wherein you are encouraged to commit violation. And that is where some of the global companies have set trends. If you really see, whether it is GE, the kind of companies, they believe in demonstrative governance. The first and the foremost is the top chief. He himself would be a kind, the person who is the inspiration for the entire model. And this came from the Japanese thinking. Toyota started it. So that is what we need to encourage, because believe me, in Institute of Internal Auditors, we have something called as the tone at the top. If here you don't believe, the entire body will not believe. So you got to strongly believe in what you want to do. So that's the same with an organization. The board has to very strongly believe in its culture and practice it and communicate it right down to the last layers of the organization. So that is where it starts. Then of course the audit committee, they have the job of reviewing the findings of any internal fraud investigations, internal auditors findings, and related to suspected fraud, including one is the general findings of the internal auditors as well as those relating to the suspected fraud, irregularity, and they report them to the board. So there is a tremendous, believe me, responsibilities cast on audit committee to not only simply look at what's coming in, also to demand investigations. So believe me, there's a whole new area which is opening up there. And as I said, regards the CEO, CFO, they have to certify that there are no transactions entered into by the company during the year which are fraudulent, illegal, or violative of the company's code of conduct. Take a large organization and you ask the CFO, please give me an actual confirmation on this. What is his basis? What is his basis of forming this conclusion? Will he go down to the records and start searching? He is again depending upon a system, and the system includes internal audit, process and control consultants, anti-fraud risk consultants, who he has to rely on. There has to be checks and balances with regard to the system itself of fraud risk management. So that is where the opportunities start opening up. Otherwise, well, it is a question of the risk appetite of the CFO. If he wishes to go ahead blindly signing, he knows the risk behind it. So that is where organizations which are looking at good governance, they need to look at setting up those systems in place, because while the CFO has to rely upon a structure which is functioning there. And look at the second part, instances of significant fraud of which they have become aware, and the involvement therein, if any, of the management or an employee having significant role in the company's internal control system over financial reporting. It's a very kind of confused statement according to me, because it talks about, okay, system of financial reporting, okay, control over financial reporting. But it also talks about, which means somebody said window dressing, right? This window dressing is what is coming in here very clearly. If you're trying to make up things, whichever be the level, it says you got to look at it. Last but not the least, let us look at the role of the auditor and the fraud. Subsection 12 of 143 clearly says, Notwithstanding anything contained in this section, if an auditor of a company, in the course, please see the word, in the course of the performance of his duties as auditor, which means you are doing a job as auditor. The next statement is the most dangerous, has reason to believe. How will you get reason to believe? So you have to have in your audit program various steps which brings in reason to believe. Right? So reason to believe that an offense involving fraud is being, now this is a very dangerous word, is being. See, if you go to fraud investigation, most of the fraud investigations start after it is established that either there is a loss or there is a potential loss. Then only they say, okay, let's find out who has taken the money. How did they take it? Very few start with red flag indicators leading to the unearthing of a fraud. It is only the post impact which generally is kind of the trend that works. So this brings in the new situation that the offense involving fraud is being or has been committed against the company by the officers or employees of the company. In fact, in this context, if I take Information Technology Act, it is little more dangerous. Cyber frauds. Their section 43A of the Information Technology Act says where the crime or the violation has been committed, is being committed, or is about to be committed. Now this is too much, no? Now, which means to say, I have to be like looking and saying that maybe there is a fraud here, maybe there is a fraud there. And looking at the complex scenario with which we audit today, how many of us understand the systems that bring out the figures in the balance sheet, profit and loss account? We simply trust those controls, and that is where this starts leading to a new situation. Should we blindly go about trusting those controls in information systems? So he says he shall immediately report the matter to the central government. It doesn't say after you complete the audit. On your coming to know, shall immediately report the matter to the central government within such time and in such manner as may be prescribed. Of course, fortunately, the new addition to that which amendment provides is that they are providing for a threshold limit. What should go to central government? Otherwise, imagine, I was looking at the person who is going to receive this information at the central government. They will have a lot of work to do, isn't it? So, this is one. And of course, now what has been done is all other frauds below this threshold limit certainly will go to the audit committee. This was introduced 22nd of December. They are yet to prescribe. It said shall be prescribed. So there will be a threshold limit to be prescribed. So that brings us to the new challenge for statutory auditors and area of practice. See, always the opportunity is the other side of the challenge, isn't it? There's a huge opportunity lying there, but at the same time, it involves a different kind of an animal as compared to the traditional statutory auditor. The first foremost requirement for a forensic auditor, what do you think is it? Okay, first of all, what is forensics?
Evidentiary.
Yes, sir?
Having the value of evidence.
Very good. Anybody else? Simply fact finding. Simply fact finding. You have come to know of a suspected situation, you are going to find the fact, or you have come to know that the loss has occurred because of fraud, you are going to find out how it happened, why it happened, etc., who did it, etc., etc. So, in a very simplistic understanding of a layman, forensics deals with connecting the material loss or the intangible loss with the perpetrator and the route which he took. So the method which the modus operandi, that's what we call, right? Which the person took. So in a simplistic sense, that's what it involves. Of course, your forensics, we will find that there is tremendous amount of areas of forensics. The word here is intentional deception. Again, here it is slightly varying. It also says made for personal gain or to damage to another. The relative adjective is fraudulent. So this is what Wikipedia generally says about fraud. Of course, there are some other things, but if you see the last one, which is very interesting, it says betrayal of inherent trust in expectations resulting in illegitimate gain at the cost of tangible or intangible harm to the victim. So, all this fine, but then thanks, they have fixed fraud in the Companies Act 2013. Section 447 explanation clearly defines the word fraud, and believe me, if you look at this as fraud, everything bordering on fraud will come within the ambit of fraud. What does it say? Any act or omission, concealment of the fact, or abuse of a position committed by any person himself or by other person in connivance in any manner with an intent to deceive. See, the intent comes here, right? Intent to deceive, to gain undue advantage from or to injure the interest of. See, a person could have gained undue advantage, does not affected the person, the owner. For example, your contact base in your phone is stolen, God forbid. Did it cause harm to you? Maybe not immediately. Did somebody else gain? Yes, that's what IT Act, the Information Technology Act clearly defines. It says harmful gain or loss, both are considered, right? So it talks about to gain undue advantage, and the company or its shareholders or its creditors. So this is where the interests affected. Anybody, it could be the company as such, or it just stakeholders or a part of the stakeholders or its creditors or any other person, whether or not there is any wrongful gain or wrongful loss. So do you see the difference here? It does not have to necessarily have harmed somebody or somebody should have gained. If a person is purported to have taken and it is established that the intent is towards this, even though he might not have milked the cow, you still can take him to task. It's a very wide definition. So that is where now the responsibility starts coming in, because somewhere hidden within this is suspected fraud. Because the last line says, no harm happened, no gain happened to anybody. But there is a tendency, there is a route which was found out that somebody is trying to do that. They didn't achieve it. Still, it will count under this. So suspected fraud also comes within this. Of course, there is tremendous punishment of fraud which has been provided. Imprisonment of not less than 6 months, not less than 6 months, and going up to 10 years. And fine which shall not be less than the amount of fraud or 3 times of such amount. There is also implications for the auditor, where the auditor is established directly or indirectly to be part of the fraud. All this will apply to him as well. So that is where obviously all this comes from so many episodes that we have had in the recent past, certain large corporate frauds, wherein it was kind of connection was established between the auditor's role, either being silent spectator or not having played his part with regard to the frauds that took place and harmed so many people. So believe me, under Companies Act, if you look at where all fraud is defined or where all fraud is kind of indicated, is one with regard to incorporation. These are sections which specifically talk about defrauding and frauds. 2, section 36, inducing somebody to invest any money in the company, wrongfully, obviously. 3, acceptance of deposit with an intent to defraud depositors for any fraudulent purpose. This is a very generic section, 213 and 339. It says business conducted with an intent to defraud creditors, fraud, misfeasance, or other misconduct of the company or any of its members, or even withholding information from members. So all these 3 categories get covered there, which means you can imagine anything can be covered under these 2 sections. Further, 229, furnishing a false statement or mutation or destruction of documents. Then 251, application for removal of name with the object of evading liabilities or intent to deceive. So somebody wants to simply close a company. You have to ask the question, why? Is there a fraudulent intent? Right? 448 deals with making false statements in any return. See, this is something we have to be very careful about. Of course, all this, the degree of enforcement and how the enforcement will proceed is something which we'll have to see. But prima facie, if you look at the technicality of the section, it is lethal. because it talks about making false statement in a return, report, certificate, financial statement, prospectus, statement or other document under the Act. So the scope is very wide if you really see. A simple false statement can lead to being termed as a fraud, and thereby all the associated parties, etc., stats are coming in. So there are various fraud categories broadly. You got false accounting frauds and misstatement frauds. Tremendous. And we have got some greats in the history of India who have been fantastic, I would say, professors in creative accounting, right? Which has led to so many frauds. Asset misappropriation and embezzlement, insurance frauds, human resource frauds. Largest automobile company was hit by this. Somebody was running their recruitment department. He was trying to take applications, taking money from them, saying that he will get job there in that company. Of course, it never resulted. Right? Information and IPR fraud. This is becoming, it's widespread. It is new to our country in a way, because do I have to buy software? Paying 6,000 rupees for Windows is criminal. Right? So that's again part of the fraud. Corruption, money laundering, investment and auction frauds, and the whole domain of cyber frauds, which is phenomenal and emerging. I would suggest, please go and find this report and read it. It's an excellent report. This is from the Association of Certified Fraud Examiners. This is a 2014 survey. It has got tremendous things that you can use in your day-to-day profession, believe me. I would also suggest that you take the Deloitte report, which I referred earlier, because it also has very usable, and you just Google it, you will get these reports. There is no great deal about them. Okay. Now it talks about the various categories. They call it as a fraud tree. Right? Corruption, asset misappropriation, fraud, financial statement fraud. As I said, one of the fundamental things to perform the role of identifying fraud or being aware about fraud is to know what kind of frauds are being there. So this is where these kind of knowledge artifacts come in very useful. And if you see, I'm not going to the details, but it talks about every popular category or scheme of fraud. And you see here, I'm sure if you simply look at what has been happening in the political space in our country and look at it, bribery, invoice kickbacks, bid rigging, purchasing schemes, sales schemes. In some of the states, this bid rigging is taken for granted. In fact, if you don't know how to do bid rigging, you are not even in the particular profession or that trade. Road contract, for example. This is a sad state, but then that's what all that comes to here. Illegal gratuities, right, which is rampant. Economic extortion. Many of our clients suffer from economic extortion, right? Then, asset revenue overstatements. This is with regard to financial fraud, right? Asset revenue understatements. So you find all that here, timing differences, fictitious revenue, concealed liabilities. You can go on. I mean, I would not take this time to read it, but you can find it all there, which is given. And asset misappropriation, there is a whole world. And it talks about cash related, inventory and all other assets. This entire thing does not include special cyber frauds. So that's a separate category altogether. Right? So here, of course, ultimate intent will boil down to somewhere here. Somebody is trying to steal something, somebody wants to create a damage or do something of that sort. So again, if you see, of course, one is theft, fraudulent disbursement. See this centerpiece? As auditor, you deal day in, day out with disbursement audit. And if you really see here, everything from billing, payroll, expense reimbursement, check tampering, register reimbursement, ghost employees, mischaracterized expenses, forged marking, forged void. You can keep on going around this, and you will find, if you simply put your antennas up, looking at a transaction, you will understand, should I suspect it or not? And this training has to go down right into every layer of the auditing the firm. The training becomes extremely essential because, especially, the article clerks and audit assistants who are there, they are good people. That's the whole problem. They are all good people. We are all good people. And that's where the problem starts. Because what is the first and foremost requirement for a forensic expert or a fraud auditor? Think like a criminal. You got to. You got to think like a criminal. Not do, obviously. Think like a criminal. Because unless and until you have that skeptic thinking, you cannot look at that dimension of what's happening on that. Skepticism or professional skepticism is actually the foundation of the profession. So especially when it comes to fraud, unearthing frauds, we have to have that professional skepticism alive, right? Okay, there are top honors. Again, I'm not going into too much of details on this. I'm sure I don't have to read out those Hall of Fame names, right? And the kind of numbers. But all this now looks small now. Sharda scam, 2G, coal scam, this helicopter scam. Then they find out and tell you, no, some of these were conducted in 80s. So you're unearthing them now. So if you really look at each of them, and believe me, you can find a lot of investigation reports around most of them. It is important for us to read those investigation reports because you will understand what is the modus that was adopted by these guys. And believe me, 80% of these financial frauds are by cooking up books, diverting funds entries and all that. So that brings in the importance of us being on our awareness.
Tell me that GVK?
Yeah. The Mumbai airport fraud last year which was reported was on that. So there was a huge 5,400 crores of fraud which got reported last year.
Nothing has happened to GVK. SIRC still is doing great guns.
Yeah, I mean, there are two perspectives to this. Unless a fraud is proven, it still is alleged fraud. But then the question is, has it been proven? It is still going on. The investigation is still on. So we don't know what is the state. Company may be doing well. Enron was always doing well till they fell. And that is where people knew what happened. So the flourishing state of the company and frauds, sometimes they may have a direct connection also. We don't know. Satyam was doing very well, isn't it? They were on the top of the world when the fraud was unearthed. That is where, as I said, first and foremost, we have to think as normal human beings and understand the psychology of fraud. Unless we understand that, believe me, having done some of these fraud audits, is impossible without some help to find out what happened. Almost impossible, because guys are ingenious. You have only a small scope of these books of accounts, what is recorded, all that. But much of the fraud happens outside. One of the recent bank frauds that we handled, this is just a guy who rose as a clerk, became a branch manager in a branch. Till that time, believe me, he was one of the best employees that somebody could even think of. Best in the sense, ethical guys. Somewhere he tasted success. He started a small fraud. Always in crime, the first crime is difficult. You agree with me? It's only the first crime which is difficult. After that, anyway, one is done. பாவம் தான் பண்ணியாச்சு இனிமே ஒன்னா இருந்தான்னா பத்தா இருந்தா. So that is the psychology of the fraudster. So that is where, if you really look at the kind of frauds that have taken place, as I said in the branch case, this guy started with doing that one small fraud. Then he found that nobody detected it. It went fine. And he started that first fraud to help somebody. See, there is also philanthropy in fraud. Right? So I said, I have not gained anything. I only helped somebody else. Right? These Robin Hood characters. And then slowly what happened? He was promoted. That is the beauty. He was promoted to another branch. He colluded with a client. His good luck that the client won a political seat and became an MLA. Then his client came and approached him where he was at the next branch, and they really started doing business together. The total amount of loss to the bank, 160 crores, spanning 5 branches and 15 years. Totally unearthed by any kind of audit, any kind of monitoring mechanism, any kind of whatever happened. They detected it because they now identified it is missing. Then they called us and said, to find out how it is missing, we have to at least book this guy. The guy is standing before them, they know he is the criminal, they can't do anything to him because the system of justice requires evidence. Unless you are able to prove, it is always an allegation. Fair enough, because otherwise you will be harming quite a lot of other people. But this evidence is where the forensic plays a very critical role. As I said, it is the evidence connecting the crime, the criminal, and the crime scenario. Unless this is done, you cannot bring the criminal to the books. So this is what drives fraud, understanding the psychology of a fraudster. The entire, discipline of fraud detection, fraud prevention, forensics is primarily about psychology. If you understand psychology, then the rest of the things you will know where to proceed. Otherwise, you will be just digging the garden and find nothing except that you have ravaged the entire garden. So, opportunity number 1. The intent is, there is one 500 rupee note lying there. If it is there, nobody is claiming it, take it. Right? Second, if there are no controls or weak controls, why not do it? If he is an idiot, what's my problem? They have not put in controls. Take it. So this is what we call, these are various ways to justify opportunity. Second, pressure or incentive. Lust for easy money, lifestyle. This is a usual problem of greed, wherein wife says, next door has refrigerator, when the damn thing in your life are you going to get a refrigerator with your government job? So there's an obvious opportunity there. Then psychological or emotional drivers. I did that fraud under family tension, otherwise I am a very nice guy. You will find a lot of these justifications. That day I was not feeling well, I don't know somehow how I started doing that. All this you will find when you talk to those criminals. Believe me, we have personally talked to many of these guys. When you talk to them and you start talking to them, they are the most benign individuals. And believe me, their looks are most religious guys. It's very hard to even, when you start as a fraud investigator, you really start thinking twice. If you don't have your professional skepticism, you're wrong guy. Such a nice guy. Comes from an orthodox family. Then when we start understanding, his orthodox family is in 3 places. Then he says, I have to feed that, I have to feed this. Out of need I did it. This guy, believe me, operated the clearing accounts in the bank for a direct cash transfer into accounts. Please see how he violated the internal control. Can there ever be a direct cash transfer from a clearing account? He did that, and that money was withdrawn from 15 different places using debit card. This is amazing. The problem was, when he draws using debit card, he has also filed an FIR knowing very well that no action will be taken on the FIR. So he says, sir, card was lost. I didn't take money. So in law, you have no way to prove it. He is still happily settled. Of course, facing CBI investigation, this, that, everything is going on. But that evidence, why that evidence is lacking? Again, because of lack of internal controls. You also require adequate internal controls for evidencing. If you had a camera in that ATM and you were able to spot who this guy was, half your problem is straight away solved. But then investment in controls is a big problem at the board level. Should we have a camera? That costs so much money, multiplied by so much number of ATMs. So that's it. Greed, challenge, hatred, jealousy. Hatred also is a very, very prime cause. If you take world over, disgruntled employees have committed fraud. In fact, in one of the cases where we dealt in an earlier fraud, in fact, more than a fraud, it was a sabotage. This system administrator brought down the entire email system of a financial services company for 5 days. You can imagine what it means for 5 days for a financial services company to be without an email system. Just because he thought he was more deserving of the promotion rather than his counterpart in Bombay. And it took a whole lot because, mind you, system administrator is a very powerful guy. He's got certain privileges to the system. Then the last one is rationalization. It is not long. They anyway don't pay me well. Right? My work is not recognized. If the victim is gullible, it is not a fraud. Right? So, this is the very popular principle of the fraud investigator, wherein it is called as the fraud triangle: opportunity, rationalization, financial pressure. So, when you are actually, interrogation is a very important aspect of the investigation. And believe me, it requires tremendous amount of psychology and skills. It's not easy at all. The sequencing of your questions, what we call as, you have to fish the question out. So there has to be the very way that the entire thing is structured has to be extremely pleasant, extremely natural, yet very structured. And that is a challenge, believe me. That's certainly a challenge. So the impact of fraud, I don't think we'll have to go into that, but then there can be either financial, non-financial. As we see, we have experienced this, any of the examples that you take in the history, cash is lost, assets are lost, profits are lost, share prices are lost, market share is lost, and you could have legal regulatory implications. How many of you have recently read about the Sony Pictures attack? Anybody? No? Interview, okay, good. That's right. The movie is called The Interview. The beauty is, Sony got attacked only recently, about 2.5 years back. The PlayStation network